Hi, I'm Pattu from FreeFinCal. Today, let's talk about the new silver ETF from ICICI. This will be the first silver ETF. The NFO period is between January 5th to 19th, 2022. So, some investors are excited about investing in silver, but you need to know how silver behaves before getting into it. And I want to make this clear that before we look at the actual charts, silver, just like gold, is a precious metal and it's going to be volatile. In fact, we're going to see that silver is a lot more volatile than gold. So, a silver ETF is well suited for trading. Experienced traders, this for them, this is not a problem. They will know what to do. But for newbie traders, please appreciate the volatility of silver. When I'm looking at volatility, I'm looking at the long-term volatility. The short-term volatility is a slightly different ball game. So you should look at the short-term volatility before getting in, and it will be better for you to observe the volumes for this ETF and look at how efficiently the AMC's authorized participant is able to arbitrage out the NAV price differences, and then you can get in. But otherwise, you may end up losing money because of the price NAV differences if that is not arbitraged out properly. So please take care with respect to that. So I have nothing against trading in silver. That's entirely different ball game, and this is a very nice way to do it. I am only going to talk about investing in such a silver ETF over the long term. So that whether it makes any kind of sense to use it along with gold instead of gold, etc. So we will be comparing gold and silver and see where that takes us. I have already pointed out several times that there is really no need for gold in your portfolio, and obviously I'm going to say the same for silver as well, but let's see how it fares with respect to gold. So this is the price data per ounce for gold and silver. Gold is black, silver is red since 1915. This is from a paid source, macrotrends.net. It's from there. You can see the huge spike in the late 70s, early 80s for silver, and still silver has not yet gone. I mean, with respect to this, silver is still underwater. I mean, it's still not reached that. At least in terms of gold, it hit a peak somewhere around the 2010s, and then it's hit a trough, and then it's hit a peak somewhere close to last year, and then so at least gold is trying to the gold in USD is trying to it has some kind of a cyclic behavior, at least over the last 40 years, sorry, not 40 decades, 40 years. There is some cyclic behavior, but that's there in silver as well, but it has been underwater for a long time. So even from here you can see that it's a volatile asset class. Now, if you look at the correlation with respect to gold since 1915, the correlation in monthly returns is about 47%. Over the last 2 decades, the correlation has increased to 63%, excuse me. So that's something. But if you look at the standard deviation, that is the variation in the monthly returns, the standard deviation of silver is almost twice as that of gold, whether you look at it since 1915 or you look at it only in the last two decades. So that's very important. So you're basically dealing with a commodity that is twice as volatile as gold, and that means that the risk is significantly higher with respect to investing in silver. And this is the drawdown, that is the fall from a peak for both gold and silver. Silver is in red. You can see that silver is still underwater with respect to the peak in the 1980s. But you can see that cyclically gold has tried to get back to an all-time high here, there, and then it's underwater, up, high, then there's underwater, up again, and so on. But the tenure that gold is underwater is decades. The same is true for silver. That is the reason why you should not use it for long-term investments. Even if you say I will maintain my portfolio properly, rebalance it properly, and so on, it's just a frustrating asset class to hold. This is because I don't know much about silver, but at least in terms of gold, it's a asset class that people prefer when they are in fear. Whereas when there is pessimism, gold improves, but when there is optimism, equity increases. Generally, people like to be more optimistic than pessimistic. Rational or not is another matter, but generally people like to be more optimistic than pessimistic on the whole. That's why equity does better, and that's a reason why you need to be in equity. I mean, all gains are notional until redeemed, but at least you can stick back the you can back the optimistic asset class instead of the pessimistic asset class. That is the reason this graph should tell you to stay away from both gold and silver. I'm messing up my sentences today too much. This is the 5-year rolling returns, and you can see that the correlation between the gold and silver prices, silver is in red, gold is in yellow, has improved in the last 3 decades or more, a little bit more than that. They are more or less in tandem now, the ups and downs in the last couple of decades. But you don't know which is going to do better over 5 years. Sometimes gold will do, sometimes silver will do. That is going to be the same for 10 years as well. These are the 10-year rolling returns. Again, you can see the correlation has improved between the two metals. Whether gold will do better or silver will do better, you don't know. Something will do better at some point in time. So it's basically pot luck. So I would strongly suggest that if you are interested in trading in silver, please appreciate the volatility and trade. Please recognize that the rules that you use for gold may or may not apply to silver, so you be a little bit careful about that. But for investment, a silver ETF absolutely makes no sense. Gold also makes no sense, but there it is.